Hi guys, John here, Mr. Forex Fire. It is currently the 22nd of November. The time is precisely around about 1:25. So I'm doing something with a twist now. We've done a lot of sessions lately where it's been the London session with the Euro USD. So now we're going to try and do the Euro USD on the New York session. I don't think I'm going to do it over the span of 2 hours. I'm going to possibly do this from the 1:30 to maybe 1:30. I'll do it for an hour. We'll see how it goes, see what happens with the trends. We'll see if we can find something, and we'll see how it goes from there. Okay, guys. A couple of things I just want to talk about. First of all, is if you're enjoying the content that I'm doing, okay, somewhere on the bottom of the page here, you'll see join on the YouTube page. Click on that and for support the channel for the price of a cup of coffee. You'll get full access to everything that I have on the Discord area or here as well. It just helps me host everything that I do on the videos. From there, in the description of the YouTube, there's a GoFundMe page. Again, if you want to give a little bit more towards what we do with the Forex Fire, that's all very well, and it's very much appreciated as well. So if you do get quite a bit of value out of this, you could help subscribe to the channel by doing that little join and get the monthly stuff where you get access to me fully one-on-one, or you can just drop a little donation on the GoFundMe, which will be in the description below. Okay, so now we've got that out of the way with, we're just going to share the screen, and then we're going to set our goal posts. Okay, let's take a look. So just going to get rid of a few things first of all. Make my handsome face a little bit bigger. Right, so again, we work upon the principle of, excuse me, we work upon the principle of the 1 minute chart, okay? But we're just gonna do the setup. We'll go through the basics as always. This is gonna be 1:30. Start, and I'm going to do this just till we might give it to 3 o'clock to be fair. And the reason why I do this in the block is simply just because we can control our emotions and control the trade. Okay. Excuse me. So we can see on the 15 minutes, 15 minute, we have a downtrend. Okay, we've got a massive downtrend on here. I'm just going to go to the 1 minute. If you just bear with me, what we're going to do is we're going to do our path, and the path, as always, we start from a high, and you just tell you what, we need to get that sorted. The path, all the path is basically, it's just a lower, you get an intermediary price, okay? But on top of that, when you get the longer path and you open up your time, you're seeing the higher time frame. Just we're in an intermediary price range. Let's have a look at this. And again, just for visualization, I'll show you guys. So as you see on here, you've got intermediary price. As you go up to maybe the half hour, you see that those play out pretty well with the way the zones go. Okay, so that's where we are with price. Just means if we break a structure, if we break the structure, we know we're going to be coming back into one of these swing point zones. Okay, so at the moment I've gone up to the 5 minute, and I ideally want to see that high of that swing point and that low. I want to see one of two things. I want to see this swing point here. This is a range, okay? So as we go into the range, from there to there, that's the range we're working in. We'll highlight the field of play. However, I do want to break a structure out of this. So I want to see either a pull up and away, okay, or a pull down and away, because then what I'm going to be looking for is the order blocks within the range for price to return and for it to come back out of play. Okay, so what I'm going to do, I'm going to pause the video for now. In fact, what we'll do is we'll do our highs, because that's the highest point of this for that range at the moment. So we've got a high, we've got a low, low high, low. We've got liquidity residing on the top of here, so there's trying to be an attempt for a break or a push out of this here. So there's liquidity residing along the top of there. That's liquidity there, and we're waiting for a push out to either create a new low, or we want to go a push out here to create a higher high point. Okay, so I'm going to stop the share. We'll be back in a moment. We'll wait for that break of structure, and we'll take from there, and we'll see how the New York session plays out for this today. Hi guys, back again. So as we were looking on the 5 minute, the 15 minute, and down to the 1 minute, obviously we're waiting for the structure break before we even apply anything. So as you can see from here, we've got a low, and then we've got the liquidity on the lower high side here. We're waiting for a break out of this structure, out of this structure point. So I can't really call a trade or anything where I think the trade will go. And again, at the moment, we've got a lot of consolidation inside of the area. So nesting inside of there, the zone itself, that's only what, 6 pips. Overall on the swing, we've got a play of around about 17 pips. First time I've tried to trade the Euro USD on the New York session. A lot of people prefer to trade it during that time. However, I personally, and I've done a lot of sessions with this, I found a lot more success trading this from a 1/2 to a 1/10, or possibly a 9 to 11. In fairness, again, it just depends on what the market makers want to move price and how they want to move price. In fairness, there's a lot of it's ranging at the moment. It's been coming down quite fast over the last few days, to be honest, but now it seems to be sort of finding a range and consolidating in itself, if that makes sense from there. So from that, if we look at this as a date range, you're looking from that high there down to there. you're looking at around about 2.5 days worth of stuff, okay? And 2.5 days worth of movement, that in itself has only been like a 33, 34 pip maneuver. So we could be sort of getting into that constriction or consolidation zone. Overall, when you look at this, again, even if you go on a higher time frame, you can see where I've been trading these within the goalposts. We're getting the movement and consolidation has been happening during the period of when I'm going to trade these. Some of the movements have been coming like mid-afternoon when you look at this, like 1s, 3s to 5 up till 10 o'clock. It's been a lot of sideways movement here. But overall, the general move of the Euro USD has been on a massive decline, to be honest, all the way back from May in the summer. Again, we do these goalposts purely because, one, I've never been into scalping much, in all honesty. Before I became a full-time trader, I was always a higher time frame guy, and the tables are turned more certainly simply because now I've got the time and I'm able to sit in front of the charts. Not that I do it all the time. I only look for a couple of trades a day. From what's happened with my evolved trading plan is now I use smart money combined with a scalping sort of method, what I've learned over time. And this is why I came up with the goalposts, because scalping can be very emotional. Scalping can play with your mind. And when you sort of get into a losing trade, some people scalp and they don't have a stop loss. It's one thing I've always done. I've always kept the stop loss. Same as when I used to trade with another group, guys in that group, even though they were sitting in front of a computer, they would have a stop loss set. And as it was getting close to the stop loss, they would move their stop loss. Now, that's, for me, it's a definite no-no, because then you just become emotionally tied to the outcome, because then you're chasing the money. If you set a stop loss, that should be where you are comfortable at losing your money. Okay, just a tip for today. Again, from here, guys, what I'm looking at is basically this coming out of a range, and it looks like it's going to be stuck in a range for some time, to be fair. But what we can do is possibly highlight some imbalance areas. So if you look back in the range, you've got the buys in control, okay? You've got a spike here, okay? You see where that spike is? So if we lift that all the way up until we have a comeback, which is here, okay? That there, guys, is an imbalance area. So what could happen is we could get a reaction where price may just simply come down to 50% of this area and then push up out. If there's not going to be too much movement in price, okay? That could be one thing that may happen. We'll see if that comes about. Again, we always speak heavily about 50%, okay? You're talking that's around out of 50% area. We may get a bounce off that. However, we ideally want a push out of the swing area, because as long as price stays within the range, as long as price is staying within this range here, okay, and it's consolidating, it's going to be harder to judge whether to go long or go short. We ideally want the price to show its hand where we get a breaker structure. Then we can start looking at things like order blocks on the bottom here, okay, or the order blocks on the top, if that makes sense. So we're just waiting for price to show its hand. We've got, at the moment, price price action at the moment coming down from the swing point. So that's a retrace. And then we're waiting for the continuation and trend, as we call it, okay? The continuation and trend at the moment, it's come down, and all of the imbalances down here, the improper price action has been fulfilled, and there's liquidity building, especially along this top end side as well. So as we look along here, you're getting liquidity building along the top of there as well. And for me, it's always good to mark these out as you are doing your session. Okay, so there's liquidity there. Again, we might get a breakout on there, but we ideally want not just a breakout of this, you want to see the breakout of the highest side of where the trend's coming down from. Again, this is a target here with regards to a possible entry, if that's to make sense, simply because it's in balance, where all we had in here was the buyers. Once we got the turn from this low, the buyers, this engulfing area where it engulfed this candle here, it just shot up through. It was just buying power, so price has to come down to mitigate into this at some point. If we do get the price come down and mitigate into this, and then we sort of get a break, let's say we get a, always plays up this. Let's say we get a breakout here, then a touch on there, then we might see that downside come to here. So we need either scenario 1 or scenario 2. Okay, so we're getting a lot of consolidation at the moment. It's like a spring. The more consolidation within a specified area and the more liquidity that builds up, you're going to see such an explosive move out of that area that will take liquidity on the high side or the lower side. It's just like a coiled spring. It'll only take so much tension, and then eventually you're just going to smash through the targets that it needs to do. So what I'm going to do, I'm going to pause the video and we'll be back in a sec. We'll see if something breaks, and then even if we can get into one trade or a setup of one trade on this New York session at the moment, and then we're going to have an end of conclusion or a conclusion at the end of this session, and we can have a little, maybe a little bit of a comparison with regards to what I've done today compared to what I do on the London sessions with these. Okay, it'll be good to have a bit of a chat and a comparison with that. Hi guys, so it looks like we've had a break. Okay, I'm just gonna change a few things up and get that bigger. So we've had a break, a massive spike down on the euro. Again, what could be looking at here is an order block, and I'll possibly use this order block here. Okay, so if we just clean up the charts a bit, we've smashed through the imbalance area. Clean up the charts, and then we can set up the chart for an entry. Computer seems to be playing up the day. Right, so this is the order block I'll be looking for. And just a simple process. You could have one or two things. You could have that set as your stop above that high, just to give you a bit more cushion. Or if you wanted to go super tight, you could have it here, a 1 to 7, just over a 1 to 7. I'll possibly have it here, to be fair, 5 pip stop. We're waiting for the pullback. Again, we're going to clean up the chart a little bit. Still liquidity on this area here. Let's get rid of that. We'll get rid of that. We'll get rid of that. So what's happened, guys, is we've had the floor of price coming down, creating lower lows, lower highs, lower lows, lower highs. We've come down. We haven't quite made a lower low. we've hit a consolidated area. Now, can you remember what I said about a minute or so ago? I mentioned about the more liquidity that gets built up within an area, it's like a compressed spring, the more violent the move's going to be on the push out. As you can see on here, there must be something that's come into the news, because when you look into this here, you can see the selling power, bang, and then it's come straight back up. Now, if we look further into this, okay, we can highlight our areas of significance, mainly the imbalance, okay? And again, if this is the only trade that plays out, so be it. This is just a training session as such. So there's an imbalance area there. Let's just have things marked out. Buying. I've got imbalance here. Not that it's going to make much difference, to be fair. Right, so we've got a 1 to 4.62. It's still going to push down. Looks like this is going to be on a massive downturn, to be fair. I want to see some significant candles coming back up, if I'm honest with you, with regards to a retracement. Excuse me. To get rid of this imbalance area at the minute. So we've got 48 seconds left on here. I'm going to let this candle play out, or a few candles play out at least. So what we're looking for is a retracement up, obviously into the play of here. We've got a cushion because we're going to go for the higher side. We'll let this play out for a 5 pip cushion at 1 to 4. Again, we want some of these candles here to come back in. So I'm just going to get rid of that imbalance as well. And we'll let that play out in a second. Let's get that back into play. That's what I want rid of. I'll just keep extending this. It's a 1 to 5.26 at the moment. So we'll be back in a moment. We'll let the few candles play out. We'll be back in a second or two and then see what happens. And we'll take this as the trade for today. So we're back into it, guys. It looks like we've got the candles that I was waiting for. Excuse the cough. It's a little bit bigger. We can start to see we're getting a pullback, okay? Again, liquidity is being taken, not liquidity, the imbalance is being taken where we had it here. We are waiting for basically the move from here back to the high side. We've got a 1 to 5.7. We'll see if this plays out. We'll see if it gives us our price action and see if it respects the order block. Again, the order block is simply that there. But we're cushioning, as you can see. We've got the stop loss on the higher side. Why have I got it here? It's simply for this here. It's simply for that there, the liquidity on the higher side, okay? So again, we'll see if this respects. In fact, we might make that little touch bigger. We've got a 1 to 5. There's a 1 to 5 there now. We'll see. We're getting entry. I'm going to pause the video. We'll see if this comes back up to play out of that. Again, what I'll possibly wait for is if we get a break of structure of this, because we've got liquidity here at the moment as well. If I get a break of structure of that, I'm going to then look for an order block on here to possibly hold structure to give us the downturn. So let's say, for example, I mean, obviously we've had the pull up. If we get the break of structure coming down, I'm going to wait for the field of play to come in to possibly play it off here before it moves down to wherever on a TP, if that makes sense. So that in essence, that there in itself will become an order block as well. Okay, so at the moment that there would become an order block. Again, it's broken structure. We'd be waiting for that to play out a little bit more, if that makes sense. If this was to come out of here, breaking that to come back and then touch down. Okay, but we ideally are waiting to see this move up to come down. It's one of two things. Again, it looks like this is going to hold structure. 50% of that there from that high down to here. %50 are strong areas. Again, look where the 50% is. 50%, and I don't make this up. 50% is the structure held within that there, the low. So we're waiting to see if this is going to break structure. It's going to do one or two things. It's going to come back and retest into this order block. If it does, you'd be looking for a shorter roundabout here, going by whatever structure point that this would play to. Okay, but we'll wait for that structure to be broken. This is the bias that we've got at the moment. There it's broken. So again, we've now got a break of structure. That's a break of structure. There's a 1 to 2. That's current time. Liquidity is residing there. We'll see if that holds. And again, we'll leave this trade on the higher side open, because if we get a pushback through here, okay, and it stops us out, we'll still be looking to be entering on the higher side. So there's a 1 to 5 just above us. We've got a 1 to 2.5 at the moment. Again, similar sort of process. If this comes down and the continuation comes down, we are just simply moving the price with the liquidity. At the moment, the liquidity is residing around about here. So if you just bear with me and give me a minute or two, we'll let this play out a little bit, and I'll be back with you in a second. I hope you're taking notes and this is sort of resonating a little bit with you guys. Let's have another look at the charts there. Again, just get my head a little bit bigger. Now, as you can see, again, guys, we've had another break structure. We're just going to follow the trend on this, okay? So this is all about being visual. Break structure. Excuse me. And the problem with this is obviously your areas are going to get tighter. There's a 1 to 2. We'll see, we'll get an entry on this again. Get the curve. We've got 3 possible on inside of that condensed area of the 1.5 hours. We've got 3 possible trade areas, okay, where we could get a return back to the order block and down to the TP area. Again, from that standpoint, what we're doing is we're just marking out that there. That's where liquidity is residing at the moment. And we're just following price on its way down on the structure, to be fair. Again, we can get rid of some of the noise. We'll get rid of some of the noise. And we'll just see where these can play out. And again, this is just all about being visual. Looks like we're going to be getting an entry. There's an entry touch. See if we can get this 2%. Quick in and out. And again, I'm not live trading here. I'm just showing you examples on how you can follow a trend, how price will respect these sort of order blocks. You can see it's sort of touched there to the pip. We've had quite a bit of consolidation, to be fair. From there, there's been around 45 pips of movement. Bearing in mind, guys, this movement alone for about 2 or 3 days has only given around about 34 pips. So in the space of around about, let's have a look. In the space of around about 23 minutes, we've more or less getting double the amount of pip movement within that structure, if that makes sense. We'll just see if this will hold its order block structure point and see what will come down to give us a 2%. If not, we'll be targeting the higher end entry. We'll just see what happens. I'll pause the video. We'll be back in a second and we'll see where these candles have formed us to. Okay, so we'll be back in a bit. Right, the time now is coming up to around about 2:30. We've been following the trend down, guys. I'm just gonna sort of make me a little bit bigger, and then we'll see where we are with this 1 to 2. And the order block, we more or less hit where it's been about a pip or a pipette. Roughly a pip away from hitting the take profit, to be fair. We'll hang on here for a little bit longer and we'll see if this is, whoops, go back. We'll hang on here a little bit longer. We'll see if we'll actually hit a TP of a 1 to 2 of a trade taking a day. Again, this is always about just being patient, okay? We spoke as we have a look, we set up our goalposts, 1:30 till 3 o'clock. Again, this trade here, if this closed out, we'll just possibly call this a short and sweet session, to be fair. We had our structure points, okay? There was more or less a double top here. Liquidity was residing. We were hoping for this, after we had this big initial push out, in fairness, we were hoping for this return here. It would have been more favorable for us because it would have been a 1 to 5. However, as we come down on this range, the high, the low, we had a pullback. It broke out of this, which would have been our TP area. So there was a break structure of liquidity. So we just look at the retracement area. That retracement area, what we look for the last buy before the sell. So that give us another order block area. So that give us a 1 to 2.07. TP was down the bottom. We had a little bit of a retracement and then we had a push out to give us a break structure. So then it give us a new confirmation of an order block. So we have just been following the steps down on the trend because we've had the breakout from the overall swing point that we were looking at. And as we went down a step, there was a continuation on the break structures and liquidities. So as you get that break structure, as it comes back into the previous range, you are looking at the highest point order block as a simple entry point. Again, the SLs will be just above the liquidity area of where that order block resides. And if we move a little bit further into the field of play on here, again, this is starting to pull back in. Just going to see if I can see any significant areas in here with regards to. So we have a little bit of imbalance, just to try and be a bit visual for you guys. A little bit of imbalance there, it's very minimal to be fair. But again, we are marginally playing with just under 4 pip stop loss to get just under an 8 pip gain. We'll just take a look. Let's put this up under here. So we may get a mitigation into that before we get a push down. However, if we do get, in my opinion, if you do get a push up, taking out the mitigation of the imbalance and it pushes out of there, it's just going to do that. And eventually it might end up taking us up on the higher side. So the directional bias is one or two things at the moment. We've come down, okay, from an entry. We come up. We may get a bounce from within the imbalance and then a push down. If not, we will get a push to the higher side from that imbalance, maybe a retest onto that, and then a push up, possibly then taking out our liquidity area. However, again, let's see what happens with this field of play. Let's see what happens. And then we'll take it from there, so to speak. So it's going up into the imbalance area now. As you can see, it's respected that. So this is what I like about doing these lives. It's bounced straight through that as well. It's spiked, wicked. Is it going to hold, even though it's played to that area, okay, or it's wicked through it, there hasn't been a closer candle above it. If there's a closer candle above it, then I would possibly then be expecting a bounce back off it and then a push back to the higher side, to be fair. However, we might just get the spike and wick into the area, which is what has happened. Hopefully we'll get a little bit more of a push to the downside to give us this area back, okay, for the TP, if that makes sense. There's a lot of wickiness at the moment with regards to this pair. Hopefully we can get this pushed down to the 2%. We'll see what happens with that. Big green candle instantly. So this looks like it's going to be possibly pushing to that upside, to be honest. See what I mean? It's going in big chunks. It's going a few pips at a time. Just see if this is going to push to the high side now. 33 seconds. If we get a close above that imbalance area, I would most certainly expect a push and retest back under here and then move to the higher side. We want that imbalance, even though the imbalance has been met, I want that area to act as the wall. So it's just going to bounce and rebound off it and rebound off it. If we get the close above it, then it's going to do a reversal. I would most certainly say so. It wants to do the reversal. Got the big dangly spinning top on here. Look at instantly, as soon as it closes, the big red candle, I'll be very surprised if this holds within this structure to give us a TP. It's sort of teasing with the price now, to be fair. What we want to ideally see now as well, if it's going to continue to the downside, is obviously this structure point here. In fairness, we would want to see this candle here come down and play and not just bounce off this. We want it to break through here to possibly take this liquidity, because every candle holds liquidity. So there's liquidity residing there. It is one candle, still liquidity. There's price holding structure there. Is it going to give us this now? There's a tester on there. See, like I said, I don't make this stuff up. These lines and these areas, they all hold some sort of significance. That's the liquidity point there. Just taking that. Come on, come on. Let's give that final push. Final push. It only needs to give just a pip from there as it's moving back up. 2.8 pips. So now we know that that's been taken. So it's teased on the higher side, and now it's teased on the lower side. Look at the wick on here. This has took out all of this. See, this here holds liquidity as well. That there is liquidity as well. And as this has come down and crashed down, it took liquidity from this candle, this candle, this candle, this candle. You can see it where it's wicked and spiked through. So this might be the indication where it's going to push up now. We'll soon find out. We'll see what it plays. But all of these, as this trend line is, the trend lines all hold liquidity to a certain extent. All the bounces on the way up. It just means as this candle here, as it's sort of wicked down when the sellers were trying to be in control, it's taken each area of these sort of on the step up. These will be sort of higher lows, if that makes sense. You start from a low, a high, low, low, high, a high, high, no, higher low, sorry, then a higher high, a higher low. That's what these are here, stepping up. These will be higher lows on the way up. But this wick here is taking out all these little liquidity areas of higher lows. And as we can see now, we're going back to the area where the imbalance was met. But again, even though it is mitigated from earlier, it's still reacting as a cushion area, if that makes sense. Excuse me. So it's pinned at 1, 2, 3 to the high side. Something's got to give in a minute. Something's got to give either on that high side or the lower side. And at the minute, I think it's going to be on the higher side, to be fair. You see how I predicted a roundabout here would be tested. It was here, came down for a retest. We're now getting the push back to the higher side. This might come out and stop us out in a moment now. Very surprised if this holds its structure and gives us a TP. There we are. It's going back to the high side now. It's going to come out and it's going to be taken out. About 95% certain this is going to go to the stop out area now. It's pushing, it's pushing, it's pushing. Too strong. There we go. It's going, it's going. Another push and a stop out. There we are, guys, and then it stopped us out. So again, I'm going to call that little session there, to be fair. Again, we went over a little bit about a continuation and trend and following it down. We may get the area up here now to enter us in. If we do, we can stretch this out here. Let's get rid of all this noise. Is it going to respect that? There's the touch on there, enter that on there. Is it going to respect? But see what I mean? It's respected and it's bounced instantly to the pip of the order block. Bounced off that order block. Is it going to crash through it? That's the next thing. Ooh. Is it actually going to take the whole of that thing out? wait and find out. And again, if it does take out this SL, my next area of bouncing would be this 50% of this here. And that 50%, guys, again, just so happens to be the earlier swing point we were looking at on here, you know. Let's just see if the structure holds. It was just funny how it came up to bounce off that and it come back down a bit. Looks like the USD is getting strong. What's gold doing? Yeah, gold's starting to come back up on a climb, to be fair. In fact, no, if gold's weak, the US dollar starts to become strong. And that's what's happened with gold at the moment on here. Gold was on a bit of a heavy push down. So this is why maybe the USD is getting stronger now. There's the takeout of that. So now we'll just minimize all of this. We could take this down to here, 1 to 7. Get rid of the break structure. Get rid of the order block. Just get rid of some of the noise. Again, see if this respects off here, see if it gets a bounce or crashes through. It's crashed straight through it, or it's respecting it. A lot of buying power here, a lot of buying power. Big imbalance area left as well. See from here. That there's an imbalance area at the moment. Big imbalance area. Wow. In fact, the imbalance area will be around about that there, simply because you had a bit of a pushback on that candle. You see how it's respecting this area now as well. On the previous sort of swing point. That's the order block there. We'll pause the video. We'll be back in a second just before 3 o'clock, and we'll see if this is pushed to the higher side in a moment. Be back in 2 seconds. Hi guys, so this has been a short and sweet, very short and sweet session. Because I don't normally trade the New York session anyway. But what we're looking at the moment is we've come back up to respect where that lower was, okay, as an area. Again, it was at 50% of the initial. Let's get this correct. It works out to be 50% of the area from what we were doing up on the top here, you know. So again, we're getting the push down, and we'll get, we speak about 50%, the retracement area of the order block. We'll possibly get a respect and a rebound off this, to be fair. We'll give it a minute or two before I just close everything out. Let's just say we'll get a respect on it. We possibly will, and we possibly won't. But again, we do this live. And we record. We'll just see what happens. We'll give it a minute or two. And then I've got a few things to talk about before the close out. So you just bear with me. I'll be back in a second. Right. So I go and check the door there. The kids are due back in a second because it's just after 3. Right, so we haven't come down, got a retest now. I'm going to have to close this video out. What I'm going to do, we've just missed out on the 2%, to be fair. It nearly hit the TP area. I might have closed that out a little bit earlier if I was in on the trade. However, they say I'm going to hold this and just see if it sort of plays out going into today, I might do a session tomorrow, to be fair. From there, this has been the first time I've done a New York session as such. I wasn't planning on doing anything special today because I've been getting a few things sorted with hospital appointments and things like that. Again, I hope you've sort of resonated with what I've mentioned there today with regards to looking at your swing points or your range from where you're going to be working from. Okay, and when you get your breakout, we're looking for that order block entry. But as you have your liquidity underneath your breaker structure, because when you get the breakout, okay, when you get the breakout, as this moves down from your breakout, whatever this comes to before the retracement, so wherever the price pushes to becomes your TP. Okay, so then what happens is you're looking for the order block above here. So as that price is pushing back up, you're moving that liquidity to that area of retracement. So where the V starts on the retracement, that's your TP area, okay? And as you get the retracement, if you don't go to that order block previously, you haven't gotten an entry. And if you then get a continuation down, you break through what would have been your TP area, okay? You wait for the price return again, you wait for that V shape underneath the TP area. That then becomes your new TP area. You're looking for the order block on the higher side. I'm just going to share the screen just so I can show you. There's a bit more visualization, to be fair. So as you can see here, okay, we've had a breaker structure. We were waiting. This here, we were waiting for a return in price from here to go up to mitigate into here. We didn't get that, okay? So then what happens is the entry area for this then is this here. The TP, because we had a breaker structure come down, okay? As we get the breaker structure coming down, we are waiting for the field to play back into here, okay? It came down, TP area, retracement. It actually retraced and entered into here. However, the structure-wise, it broke out of the SL structure, making this a loss, to be fair. So all's not lost. We just doing the continuation of trend on the way down. Again, this is just a short, brief video, nothing special to sort of go through, other than a little look at what the Euro USD would be playing like on the New York session. I think I'll stick with the morning sessions on these, to be fair. I feel a bit more comfortable, and it's something I've always traded as well. Since I became a full-time trader, I've always concentrated on the morning trades more than the afternoon trades. I feel a bit more confident, if that makes sense. So again, we live and learn from these things. I'm not meant to be here to be perfect. I'm here to show you the slow, painful process that it can take to get to where you need to be, to get to where you have to be with your confidence and your consistency. And that's what this is all about, okay? So if you are getting some sort of value out of the stuff that I do, there's going to be 1 or 2 things you can do. Click the little join button. For the price of a cup of coffee a month, you'll get access to this full area. Again, if you want to go that little bit further, inside the description below will be a GoFundMe page. You can donate as much or as little as you like to help towards the hosting and the run costs of this channel. Okay, guys, hope you're having fun, hope you're trading safe, and I'll see you later.